Hi friends, this is Kishore. Welcome back to my channel. Today I'd like to cover CPI, PPI and FOMC data report, Fed dot plot, economic calendar, bond auction and US dollar and crude oil price analysis. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. Fear and greed index, it is in the greed. We know last couple of weeks it's in the greed. Market rally like anything last couple of weeks and it's in the greed. It may go to the extreme greed sooner, I am thinking, but let's see in the index analysis. And this is daily heat map. Most of them are okay. Nvidia, Amazon, Costco, they made a huge run. Especially Costco posted very good results and then it rallied like more than 4%. And this weekly heat map, most of them are green, especially Costco and diagnostics and travel services. Most of them are green on the weekly heat map, except Oracle is the big laggard, and also the PFE posted bad results and it hit bad. And this is weekly heat map for the ETF. Most of them are green. Only the inverse ETFs are down. And the sector performance, especially real estate, they got very good boost from the FOMC and it rallied more than 5%. All sectors are green, so the dollar yields, everything is down, and all the sectors that are sensitive to the dollar yields and interest rates all are up. And this is the last week, these are the data released. CPI came in line and PPI data came also in line, and US retail sales, this is the big boost. Like expected is 0.1%, minus 0.1%, but sales came 0.3%. That's really a good one for the retail stocks. And Empire State Manufacturing Survey, this is the little bit lagger, like it expected 4.0, but it came minus 4.5, but it did not impact anything on the market. And this is inflation slowed to 3.1 annual rate in November. And as we talked in the last week channel video, I said like the crude oil went down a lot, so that helps the CPI inflation to come down. So that's the same thing they mentioned here. 2.3 decrease in energy prices helped keep inflation in check, as gasoline fell 6% and fuel oil was off 2.7%. And this is US pump price chart. You can see that from May 2021 to the April 2022, it went up like anything. It went up like $5 per gallon. From there, it came down in the Jan, and again it rise it to the almost $4 in the October of 2023, and from October it came down. So this price down fall helped inflation to come down. And this is US producer price inflation cools to below 1% as energy slides. Again, we are talking here energy only. So you can clearly see here in this chart, producer price inflation, it went up into the 2022 April. It's a peak point, and from there it came down to the 2.2. And this is federal FOMC meeting. In the FOMC meeting, I don't know whether Fed Powell said or not in the video, because I did not find anywhere. But but in some of the news I see, like Fed mentioned like they're going to cut the interest rates. But here in this report, we can clearly see are not really talking about rate cut right now. So that's what Fed Powell said, and we can clearly see here in the federal fund rate increase since 2022. So from March 2022 to July 2023, it went up. June they did not raise it. Again, they raised it in the July 25 basis point. Last three meetings they did not rise. That's a good sign, because we see that inflation is coming down. So that's the reason they did not rise it. That's a good sign. And current rate is 5.25 to 5.5 in the Fed funds. Like this, it may go like this. In 2005 to 2008, it went like that in the past the rates. So similarly, they may pass couple of months, at least 6 to 7 months, but we'll go and see in the CMU watch till what they when they cut the interest rate. But right now I'm guessing they may pass 6 to 7 months, and from there they may cut the interest rate. And this is a dot plot. In the dot plot, they said like projection released by the Fed showed the central bank would slash rates to a median 4.6% by the end of 2024. So this is the one for dot plot on 2024. In the they are expecting 4.6, and with the three cuts in the 2024. So based on the dot plot, media projected like there may be a three rate cuts, but Powell did not say anything about the rate cuts. But the dot plot suggested there is a chance, the probability of rate cuts in the three rate cuts in the 2024. And this is coming week economic calendar, home builder confidence index. This is one of the important one, because the mortgage rates will go down because of that Fed rate pass. So that helps the increase the confidence. But I'm expecting the good confidence index in the on Monday, but let's see what comes next. And on Tuesday and Thursday we have GDP revision and also US leading economic indicators. This is also important one, because this tells like this is a soft landing or hard landing or recession or no recession. no recession, that kind of thing. This is the one that helps to understand like US leading in economic indicators. And Friday we have PC index. This is the one Fed considers to rise or pause or cut the interest rates. So this is one of the main indicator index rate they'll see. And in the bond auctions, on 20-year bond auction is there on 1220. So if bond auction goes good, then it is really good for the TLT stock. And the TLT price chart, we can clearly say it formed the inverse head and shoulders. It's a daily chart, and it hit the almost 99. My target is 100, and it hit around 99 point some 5, and then rejected it, and right now it is 199.15. So based on this inverse and head and shoulders, it can go up to the 109. But right now my current target is 103 in the upside, and the downside is 97. So basically I'm expecting the retesting of this break, the neck break, and then it can go up. And this is the same Fed watch tool, the probabilities. Based on these probabilities, on March 2024 they're expecting 62.7% is expecting 25 basis points cut, and again in May they're expecting 52.9%, they're expecting another 25% basis points down. So this is the one really important going forward in the next FOMC meetings. And this is crude oil. So crude oil right now it's 71.955, which is a very good support line. If it breaks, then it can go down to the around 50, 62, and then from there it goes to the 50. But right now it's at a very good support level, and the CCI indicator is curling up. So there is a chance it can go up or it can go sideways like this one. I'm expecting the sideways because of the as the seasonal long weekends are coming up. So that's the reason I'm expecting that it can go the sideways. And this is dollar. So dollar is made a big down this week from 104 to 102. This is the one really helped the commodities and the materials to go up. And we can right now it's at the hit the trend line. So if the trend line breaks, I'm expecting the trend line may break. If it breaks, then it goes to the 100. But if it takes the support and goes up, then there is a chance again commodities will get a little bit hit. And this is a TNX. TNX also came down a little bit this week, that bonds went up and that TNX yields came down. And right now it is a support line in the trend line support. So if it break, and also CC at the oversold region. But these are all just for the information only, because the TNX yields are mostly by bonds. Bonds is based on the Fed interest rates and all. So if it breaks here, this trend line, then it can go up to the 3.5. That's a very good thing for the growth stocks and the and the dividend stocks like retail REITs or the utility stocks. And this skew is like hedging. It tells how much hedging is going on. Right now it hit 162, and then it came back to the 153. So whenever it goes above 150, that's a little bit concern, means there are a lot of hedging is going on. The hedging is going on means like they are expecting some kind of pullback in the market. That's the reason they are hedging a lot. So right now it is 153, little bit concern area. But if it goes down below 145, then it's better, or else a little bit we need to think a little bit cautious on this market. And this put and call ratios options, whenever it hit less than 0.8 zero 0.8, then it's considered the extreme greed. Right now we are at 0.69, and it hit 0.64 or 62 on July. From there we know that the market especially QQQ hit a bit from the July. So right now it's a very little bit cautious place. 0.69 is a means most of them are buying the calls compared to the puts. When the put call ratio is 0.8, less than 0.8, then we need to be cautious on the upside. And this is number of stocks in the S&P, number of stocks about 200-day moving average. It hit 74 and it came to the right now 71. Whenever it goes to the 74 levels, S&P made a small correction at the time, made a pivot high, a swing high pivot, and little bit correction happened in the past couple of times. So right now it's 71. So this is also one of the indicator to be cautious in the upside. And this is S&P equal weighted RSP. So it made a triple top, and also the CSA is above the overbought region, and the RSA is good 64. So there is a still chance it can go up. I'm expecting, because of this volume and the way the weekly bar is really good compared to the other two weekly bars. We would be, if you see here, it's a reversal candle here, and this is a little bit long wick here, but this is not that much long wick compared to the candle. So I'm expecting it may go up, but right now 5 straight weeks green with big volumes. Maybe there may be chance of a little bit of pullback here and then go up. And this SPY weekly chart, again, it right now it's forming like it looks like a inverse head and shoulders to me. But we need to wait and see. Right now it break this level, the previous 460 level, and went up to the 473. This week it made a 2 sigma level, a 2 sigma uh, 2 sigma range, like almost 13 points. So a little bit pull back to the 469 levels. We are very close to the all-time high, like 480. So if it, maybe I'm thinking, because of this overbought regions, and RS is good in the 66, so it can still can go up. Maybe I'm guessing like it can come back and retest this level, 460 level, and bounce back. And this SPY daily chart, on Thursday it made a reversal candle, like a spinning top, and yesterday is the doji candle, and CSA is going down and RSA is going down. So weekly chart is really good on the SPY, but on the daily chart there is a little bit of weakness. So that's the reason I'm expecting it can come back and retest this 460 level and bounce. So my support levels are 464 and 474 is the resistance. And this is a QQQ weekly chart. Again, it hit very good previous high, like 405, 408, I think. From there it came back, sorry, 405, 406 something, and came back. And it is almost very close to the all-time high, 409, and the volume is going up. So on the weekly chart it's really good, but in the daily chart there is a slight sideways are going on, and the CSA is going down and the RSA is going flat. So there may be chance that it may come down a little bit, like 400, and then bounce back and hit that 410 level. So these are my support and resistance levels for the QQQ. And this IWM is a weekly chart. So as we discussed it, this one I'm expecting IWM will be strong this month and next month, and the volume is going up, CSA is going up, RSA is going up. And on the weekly chart everything is good, but this is also almost 5 straight green candles. That may be reason I'm thinking little bit pullback, small pullback, and then bounce. And this is a daily chart on the IWM. So looks like this is a twister top to me, but there is a gap here. So that gap acts as a support weight. If it, the gap is here, it is a 193.60. If it fills that gap, then bounce back. Generally after filling the gap, the trend reverses. So I'm expecting it may come down to the 193 level and then bounce back to the 205 level. And this is a small cap, S&P 600 small cap. It also hit a triple top kind of thing, and the volume is going up, and the CSA is going up, and RSA is going up. This is a weekly chart. So I'm expecting this time it will break and go up. This time the small cap and also the mid cap performed really well on the S&P rally. This is a mid cap S&P 600, S&P mid cap on the weekly chart. This also looks like a triple top to me. And CSA is going up, and RSA is also 63. It can still go up. So I'm expecting a little bit pullback here because it's triple drop, and last 5 weeks is a green week. So a little bit pullback and then bounce. And the summary is market is a little bit in the greedy sentiment. You can see that our put option call ratio, and also the market sentiment is also in the greedy. So that's the reason I'm expecting a small pullback and rise. And small cap may rally the may continue the rally, because I see that IWM is really strong, and Fed rate pause or cut will boost the real estate stocks. Because of that high interest rates, a lot of real estate related stock like mortgage lenders, and most of the real estate stocks are down. So they may get some boost with the pause and coming rate cuts. And rise of bond prices will have banks to recover, because we know that bonds hit a lot and it went down like crazy. So bonds recover really helps the banks. And US dollar weakness help materials and commodity sectors. As US dollar is going down, the materials, especially XLB, the materials and also the commodity sector like copper or gold, they may rally. Yields fall help dividend stocks like REITs and utility stocks. So as last couple of months the yields are high, so the dividend sector, the dividend stocks like REITs and utility stocks fell down like anything. So as yields are coming down, maybe again the money moved to the REITs and utility stocks. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please hit the bell icon so that you'll get notification whenever I upload a new video. And please share this content to your friends if any of your friends looking similar kind of content. Thanks so much. Bye bye.